Hi, I'm Chris Reed, Managing Director and CEO of Australian-listed battery materials producer, Neometals.
Chris, good to see you. Thought we'd catch up. A lot going on in Europe, and most of your business is over here these days. So what's your take on what's happening over here and how it's affecting your business?
Look, I've got to say, in the lithium battery recycling world, nothing's really changing that transition to EVs. We can see at Hilkenbach, we are not limited by the availability of batteries. In fact, we are stockpiling batteries and battery modules to process. So, that continues unabated. Look, we know that everyone's experiencing these general economic conditions. For the disposal service at Hilkenbach, no change. In fact, we're in the ramp up, so that's continuing unabated. In terms of our work with Mercedes, we expect this quarter to be awarded the plant supply contract for the hub next quarter. We've commenced a 5-year R&D collaboration with Mercedes. We're working on the Stelco plant. So, our business development pipeline still full. So business as usual. I mean, the EV transition, or the electrification of everything, continues unabated, notwithstanding the general macroeconomic sort of conditions at the moment. We're particularly well funded. We've got $80 million worth of cash and investments, no debt. I mean, yes, the seas are choppy. We've set our destination. We've just had to trim the sails a little bit and, push on. Across our other projects, we put our quarterly out today. The vanadium project, we finished the engineering cost study last quarter. We've just been awarded the environmental permit. We're negotiating with SSAB to vary the terms of the supply contract to increase the quantities and the prepayment, and we'll vary some timelines to suit. We're running the debt process in parallel with that, and we've got, for a project that's producing that will produce a battery grade material out of a waste product while capturing and sequestering carbon in Finland is getting fantastic, support. It's a unicorn project.
And what about Portugal?
Yeah, and in Portugal, well, yeah, look, I mean, the only non-substitutable part of the lithium-ion battery is lithium, right? Because it carries the electricity. So, we have and are seeing record prices for lithium, never seen anything, almost an order of magnitude higher than anything that's been seen. And that just shows a reflection of underinvestment in supply and getting the demand story wrong. And so, we see that market, there'll be swings and roundabouts, but we see it going into pretty much a permanent supply deficit in a few years' time. So great support for that.
So why is electricity better for you than gas? Because obviously Germany, famously anti-nuclear, although they have extended the life of three of their plants, why is it any cheaper than gas? Why are you talking to me about electricity versus gas?
Oh, look, I think it's about more the availability. So, the electricity is more readily available than the gas. Now, we're not a big gas consumer. But we've just engineered and altered the design to remove gas completely. Now, that will suit places where we want to build plants where gas is not available. We hadn't contemplated that because we've designed our plants to take gas and electricity. But yeah, so at Hilkenbach, we're running with an all-electric design. So that's just a new option for our product offering.
Right. Okay. So it's Hilkenbach, and then obviously you're in the early stages. I think you said to me when you were in London before, it's like with regards to vanadium, you're a couple of years away from it really taking effect and taking hold in terms of your concerns over margins. So is that still the case, or are you readying alternatives there too?
No, for that project, it's not a large gas consumer. Yeah. So it's more reagent, solvent extraction, electricity. Yeah, We do have some dryers, but they can equally be gas or electrical. They're just it's just adding that equipment flexibility. That's all.
Okay, so I think your view seems to be, and what I'm feeling is it's business as usual, although you're trimming the sails in certain places, making adjustments where you need to, and you're talking about doubling capacity with the vanadium. We're talking to SSAB about the potential doubling of capacity there. So that suggests
it's really about the increasing the supply by about 50%. Yeah.
Okay, 50%. Got you. Okay. Yeah. So quite aggressive there. However, unlike with the Hulkenbach, is you're talking about a debt component. So when you've got cash and no debt, and you've got a partner with a big balance sheet, like in Germany, it kind of feels you're in control. As soon as you need to get debt and debt providers, two things happen. You need to get them over the line, make them comfortable with the economic environment and the ability of their belief in the project will work, and then you're kind of beholden to them once you kind of get going, because there's still that kind of you owe money
covenants.
Yeah,
absolutely. Look, certainly for the vanadium project, we're 50% with an unlisted company. We're running a debt process to fund the whole project. That will then sort out what each shareholder has to contribute equity wise. And we're very comfortable. There's fantastic support from the European Investment Bank and the Nordic Investment Bank, and all the climate funds and green funds and all of that sort of stuff. So that's been really, really refreshing. So notwithstanding, next door, their neighbour is having a few dramas with some of its other neighbours. It's business as usual in Finland. And I've got to say, I still amaze myself that it's probably the friendliest jurisdiction I've ever encountered, with such a pro-development, bent. These guys want projects, realise that they need to have projects up in that part of the world. I mean, we just tick a lot of boxes. Making a battery material, vanadium pentoxide, that can go into lithium vanadium batteries, it can go into vanadium redox batteries, it can go into titanium aluminium alloys for the planes, aerospace applications. And Europe's in a critical shortage. There is no domestic production outside of Russia.
So how important is that to the debt guys? Because we've had people come and talk about, we're going to have debt bonds and green bonds and green debt, and money's widely available, and yet they seem to be scrabbling around, picking up grants here and there. I mean, how do you envisage this quite large project coming together? Where's the actual money coming from? And when you say you should tick a lot of boxes, what's that actually mean? What are the hoops you're jumping through?
So look, they always start off with the economic viability. So that's every lender wants to get their money back, and in terms of a large part of the equipment will actually be sourced from Finland, made in Finland, Metso Outotec, all of that sort of stuff. So you get really, really, as an old mining jurisdiction, they have fantastic mining equipment. So, a large part of our CapEx spend is domestic, which is fantastic. And without going into it, confidence, absolute confidence. Timing, well, those the non-commercial banks, they just take a little bit longer, but fortunately they have other than economic return on their agenda, right? The fact that we're capturing and sequestering carbon and turning byproducts from the steel industry into valuable products and rendering the tailings inert and sequestering carbon makes conversations, it is a showcase project. If you were you got zero or negative carbon vanadium for a project. Now, I doubt there's many opportunities like that in the world to produce a commodity with an environmentally green flow sheet like this one is, and having a zero or negative carbon footprint.
Well, I think a lot of companies talk about it. They talk about zero carbon and carbon neutral, carbon negative, however they want to frame it. But they're finding some bizarre ways to do it. So, what makes yours more genuine than some of those kind of marketed solutions?
We can just do a mass energy balance, right? So we're taking the material and we're giving a carbonate leach. So we start off with water with some sodium carbonate in it, and then we capture and sparge in carbon dioxide to supercharge it. So, and the carbon reports into the tailings product. The vanadium comes out, we sell it, and the tailings is a synthetic limestone, a calcium carbonate. That gets used in building products. So it gets sequestered for a fair amount of time. It's inert. So, yes, we'll have independent life cycle analyses, reports. We've been working with our potential offtake partner, Betalar PLC, who use it in their Geoprime. They make building applications out of it. And we're moving from a MOU into conditional binding offtakes that with a bit of luck we'll have lined up to have executed once we're ready to make an FID.
So talk to me about your, I think that's good because I think all companies need to do that, sort of genuine independent assessment. I mean not the version that we've been seeing in the North American market. So I look forward to that. Can I just talk to you about what's going on in the market? Obviously, people are concerned about energy prices, are concerned about Europe more broadly, are concerned about the speed at which companies are trimming their projects. I just maybe hunkering down a little bit. I get the message that it's all business as usual here, but do you think you've attracted a few more shorters in the market because of what they are seeing in Europe, whether they sort of truly, they understand the situation, they understand
or the performance
your
of some of your peers. I think the negative performance of some of the peers has probably added to that. If I have a look fundamentally at our business, we're producing battery materials using the greenest flow sheets that we can come up with. In the battery recycling, we're recovering nickel, cobalt and lithium as the big three primary products. We're getting a lot of other material, but they're the big three economic drivers. And each one of those commodities would be recovered at the lowest point in the cost curve, right? So lowest carbon, amongst the lowest carbon, because there are other recyclers too, but amongst the lowest carbon and at the lowest point, if not quartile, costs. So you really shouldn't worry about at night, and we don't worry about it, but we don't worry about the feed either. But we do it meticulously. We don't go out and sort of wildcat big plants when we shouldn't. And that counts for the vanadium too. The vanadium's in the lowest quartile. The lithium technology, Eli, in our 2016 feasibility study that was announced as being in the lowest quartile. We will have new class 3 engineering cost study out at the end of March. I think it's about the end of March next year. I don't expect anything materially different. So you've got lithium, vanadium, nickel, cobalt and lithium, right? Now they're all battery materials, so the demand's not going backwards. The supply is, they can't build mines fast enough. We're down in the bottom end of the cost curve. How much can I slow it down? Why should I slow it down? We're cognizant that we haven't got cash to fund all three projects simultaneously at the same time. We're not naive, but we're in a very, very strong position to navigate.
Okay, so you're feeding into a very strong commodities market in terms of price, only with nickel, cobalt, lithium, vanadium. So the cash flow, the future cash flows is what people should be judging on, and the speed at which you get to the point where you can cash flow is the defence, as it were. When are you going to be able to actually give a sense of the economics for each of the projects in terms of nameplate capacity, or when you get there?
Yeah, look, I would envisage we can start to give really good guidance once we've finished the engineering cost study for the hub, which at this stage is in the March quarter of next year, so that you can see what the spoke and the hub, and certainly when we make a decision to join the Stelco recycling joint venture, we will have internal models that we justify our investment decisions by. I think our strategy, and judging on how the regulators treat some of our competitors that are a little more advanced commercially, is that you shouldn't give guidance on financials. You can be very transparent in terms of your recovery assumptions, certainly your costs, your CapEx and OpEx. We have no compunction about declaring those. The revenues, we're more likely to say, well, look, here's the sort of spot prices, here's the recovery rates, and this is what we would recover if we put in this type, and this type. And that's about it. And we would leave we would leave the necessary tools to come up with a model, but we wouldn't do the work for you. But, a smart guy like you, Matt, it'll take you about 15 minutes.
Less than that. We've seen a lot of companies come on and
no
talk
worries,
to us
tickets.
about, well, it's obvious.
You can't sell a secret?
We have a lot of companies come on here, and they're development companies, and they're talking about moving through the economic studies, and they go, well, this is what the economic studies tell us. If we get $3,000 gold, we're golden. And my point being is, there are marginal projects trying to get financed, and the market right now is saying, no, thank you very much. Have you got any sense that the debt providers you're talking to on the vanadium, or any of your partners, are concerned about the pricing of the metals that you are recovering?
I'm not sure about the metals. I mean, you can hedge nickel, cobalt, and lithium on the LME. So any debt provider would require you to hedge a minimum of X volume of production for X period of time, and you just have to take that as part of your financing, right? So just like gold, if you were buying gold, it can be hedged. Therefore, they get you to hedge generally. So at that point, no.
Okay. No, I just find it interesting that in the broader market, I think precious metals are obviously under a lot of
getting back
pressure
to
at the moment, right? But then the point I want to make is, like, some people are saying, we're just going to down tools now until we've got a better sense of what's going forward. Do you think that battery metals are immune to that because of the positive environment?
I don't know if they're immune, because there's people in different parts of the cost cycle. But if you've got a finite resource, i.e. that's in the ground, and you're a one asset company or one commodity company, you really have to preserve yourselves, right? Whereas, I saw an interesting quote from Elon the other day, don't build moats, build tech trees. And I sent around to the guys, hey, finally Elon caught on. Don't publish that. But, the tech trees, where you've got the battery recycling as one branch of the tree, and it's got little branches. One's got Mercedes on it, one's got Stelco on it, one's got a potential plant in Germany at Kaiserslautern, and one's got a potential MOU with Itochu. That can build a really, really nice canopy so that our shareholders can stay in the shade for longer. And then you've got the vanadium recovery project, and you've got the first VRP to be supplied by SSAB that'll be in Finland. And then we've got an MOU for a second one in a couple of years' time with H2 Green Steel. Now, they just banked 260 million euros, helped by the boys at Morgan Stanley. And that's going to happen. SMS have got the contract to build the plant. SMS are a shareholder, Mercedes are a shareholder, Volvo's a shareholder. We've been testing third-party vanadium stockpiles. So there's a branch that's got 1, 2, 3 different branches off it, or limbs with different branches off it. And then you've got the Eli technology with Bondelti in Europe, looking at a first plant in Portugal. But we've got the global rights to do it outside of that. And lithium's produced in Australia and South America and the US and China, Africa. So that technology, and so that's what a tech tree is. They're not just one deposit, it's a process that generates many different businesses, many different projects each. And so we want to build a really, really big tech tree and stay under it in the shade for a very, very long period of time.
Tremendous. Chris,
Hey,
appreciate the
and
update.
when it gets too busy, you can come around with your new chainsaw and trim a bit off in a demerger or...
Yeah. Thank you. I'll bear that in mind. I may not be the guy to operate the chainsaw though. Chris, I appreciate the update. Sounds like business as usual. You obviously remind people you've got cash in the bank, you're debt free, and as far as you're concerned, this is moving forward, and shorters beware.
I think they take their chances.